Mahindra Bank's Q2 FY21 numbers are here. Let's take a deep look, or a deep dive rather, on what they came in as. NII, net interest income, which is your interest earned minus interest expended, came at 3,900 versus 3,300. So good 20% growth seen there. PAT, 2,200 nearly versus 1,700 YoY. So good growth there as well. Operating profit before provisions, 3,300 versus 2,500. So on all counts, it looks like a very positive outcome for profitability. Now you start to wonder how that's happened or why that's happened, and it leads you to the other income figure. The other income figure is a whopping 1,452 crore versus last quarter 773. So you take out the additional 700 crore which we've got from other income, and then your profit starts looking a lot more like the ET Now poll, which had projected a 1,600 to a 1,700 crore profit. Now, on the provision side, what's interesting to note is that we're all hearing of stress in the economy, the COVID stress, the increased interest stress, banks are supposed to have issues. Kotak's provisions have fallen this quarter. So last quarter was 962. This quarter is 368. That's even less than last year before COVID happened, 407 crores. So they took a higher provision last year. So that shows what? That shows that Kotak Mahindra Bank is really not concerned about the stress, because they would have been providing more extensively in that case. So that's what brings us to the asset quality, which has been stable. 2.55 gross NPAs and net NPAs are around 0.64. If you added the Proforma numbers, the net NPA would have been around 2.7, and then your gross NPAs would have been 2.7, and net NPAs would have been something like 0.74. So a very mild increase seen even if you include the Proforma numbers. So no major red flags there. The only thing that was a bit of a dampener is that credit growth seems to have slowed a little bit. There's been basically no increased credit offtake. And then if you look at the very high price to book valuation of Kotak Mahindra Bank, one wonders how they can really sustain these 4 or 5 times price to book valuation if they're not growing. So that's something to keep your eye out for. But with all that being said, deposits are growing well. So at least the liability franchise is growing well. There's no stop over there. And that shows that in terms of access to capital, there'll be no issues, that when the demand eventually comes back, Kotak Bank will be one of the few banks that is able to really capitalize on that and grow their loan book aggressively. Subsidiaries have also performed well. Kotak Securities PAT has gone from 150 to 200. Mahindra Life's PAT, Kotak Mahindra Life Insurance's PAT has also shot up. So some of the subsidiaries reporting stable to improving numbers. Only Kotak Mahindra Prime has shown a slight tapering off. So decent results from them. Stock had a bit of a knee-jerk reaction as soon as the result came out, but it's basically pretty much flat as of now.